What's going on, guys? In this video, I want to show you guys how you can start to draw supply and demand zones, especially if you're trading futures that you guys can work with on a day in and day out basis. Now, setting this up each and every single day for scalping these futures is going to be very, very simple. We do not need to look at a whole body of work, meaning we don't need to go back 2, 3, 4, 5 days. All we are simply going to do is come into the day. We're going to just simply bring up from midnight to the market open. And then as the market opens, we're then going to add more supply and demand zones as we go along. But let's take this situation as if the market, is 30 minutes before the market open, and we're looking to kind of map out the supply and demand zones. So the first things first that I'm going to do is I'm absolutely going to kind of mark out here these highs and lows. So what I'm going to do is draw a price level line here at the highs, and I'm going to also draw a price level line down here at the bottom. This is what's going to create a range. Okay, so this is our opening range. Okay, this is our opening sessions range. So what we are then going to do from there is we're going to see where do we have multiple touch points where price action was touching demand zones and then kind of bouncing off of it. Again, some of you guys who have watched my videos maybe particularly don't like my quote unquote spaghetti chart, but again, the spaghetti chart is there so I don't have to do all of this in the morning. All of this stuff is done for me through all the moving averages and everything that I have. Again, I've been trading with that big chart with all of the lines on it, with all my indicators for years. It's very, very easy and clear for me to read. Some of you guys like a clean chart. So what we're going to look at here is a clean chart and show you that it's almost the same thing. So what we're then going to do here is we're going to draw a little bit of a demand zone where we can see multiple touch points here. If you look at the wick here, here off the market open, and then we're simply just going to drag that across to kind of take us to the end of business day. So I'm going to go down to the lowest wick and I'm going to go up to where we've touched multiple times here. And this is going to create our bottom demand zone. I'm going to then edit the properties here. I'm going to change the color to green, letting me know that anytime we get to this box, it's going to act as a level of demand. Okay, until we break a level of demand, close under it, back test it, get rejected, then turns into supply. But as of right now, it's going to be a level of demand. If we kind of look at the opening range here from the overnight session, we can see a lot of price action just pitter-pattering around, touching, not really doing anything before we had that drop into our demand zone. So what I'm then going to do here is create another supply zone, okay, because supply is going to be resistance, demand is going to be your support. So you can see here multiple touch points. We're then just going to take this box, which is going to be our supply zone, and we're going to kind of drag it across to what would be the end of the session day, which is 1 p.m. Pacific Standard Time. So now this box here becomes our supply zone, and what I'm going to then do is make it red. Okay, so anytime we get into this area, I know that it's going to act as an area of supply. So what essentially we would be looking for here off the bell, you can see 6:30 a.m. happens here. So we're coming out of a demand zone. Okay, now when we play these supply and demand zones, especially when they're zones, they're going to be, they could be 20 points, they could be 30 points, they could be 50-point ranges. They're a little bit tricky to kind of navigate a stop loss because sometimes we can give ourselves too much kind of comfort and it can kind of, put us into too much drawdown. So we need to manage these trades very, very, tight to the vest. So what we would be looking at here essentially off the bell, when you see the 6:30 a.m. candle, never put in a new low and confirm below this demand zone and then start to pop back up. You've got a clear entry legitimately off the bell here. Okay, now why would you take some longs here off the bell? Well, we're coming out of a demand zone. We already know that if we lose this demand zone, we're going to have to get out of the trade here because now it could act as a potential area of resistance and turn into a potential area of supply. So as we get that close over and out of this demand zone, we can then take the breakout here, and as long as we don't lose this level, right, this level of this overnight lows here and get back into this demand zone, we can just go ahead and sit long here. And you can see essentially we would be sitting long until we get up to our supply zone. Now we're going to want to take profits into and on the way up to our supply zone. That way we don't run the risk of having it come all the way back down, getting rejected, you know, doing something like where it's doing like this, where it's testing, and then fail and then come back down and give us all of our profits away. So the next trade setup that would happen is when we break through our supply zone. Okay, so that would come here. Again, you have to be good at analyzing price action in real time. So if you kind of take this trade here, you would be looking to sell into your supply, which you already seen how we got that level of supply here. And then once we close outside of this supply zone, we would then be looking for the next candle, which is here. And actually what I can do is this. We would be looking for the next candle to confirm here. Okay, so that's going to be your entry candle where we have this little arrow. That's going to be your entry candle as soon as we close above the supply zone and then price action confirms. Now we don't need this candle to close before entry. All we need is to see the previous candle close above supply and the next candle confirm. This is another potential entry. Where would your stop be? 1 bar stop. Okay, on this particular trade here, where would your stop be? 1 bar stop. If you're entering here, where would your stop be? 1 bar stop. And again, candle needs to close below your 1 bar stop before you're out. So here's 2 potential scalps that you could have taken, drawing your own supply and demand zones and playing pure price action. Now where would we be looking to take profits on this potential trade here? We would be looking to take profits into the next area of supply. What's the next area of supply? Next area of supply was here, that opening range, 15,224. So essentially from an entry of around 15,189 to 15,224, we are looking at about 30 to 35 points, right? So that's more than enough to kind of get in where we fit in and make a little bit of cash. Now, what I want to point out here is that you can see we put in a high, and obviously we don't know that this is going to print here. But once we put in this new high, what I'm going to then do is draw another supply zone at our high. Okay. Now, before these candles are going to get printed, I don't know that we're going to not put in a new high. All I know is we've broken out of the range. We've broken through all supplies and we tested this area and pulled back. So once we pulled back, I know that there's an area of supply here that I need to kind of keep my eyes on. So as of right now, that level is going to get changed to, that zone's going to get changed to red. And then we're going to watch the candles pull back. We're going to watch it come back up again. And as soon as it tests this area again and does not break through, now we know we're onto something. Now we know that we've got another potential supply zone. But I want to make something very, very clear to you guys here. And I want something to kind of stick out. Look at when we do pull all the way back, where we pulled back to our original supply zone. So at this point in time, as you're watching price action, it's currently at this time 9:35 in the morning, 9:25 in the morning. We see that pullback. We see the potential supply here. We see the pullback. This is going to get turned to green, because the reason this is going to get turned to green is now that it's acted as an area of support, it then bounces off this old supply. Okay, so if you've heard the old saying, old resistance turns into new support when old resistance is broken and tested, it's the same thing. When a level of supply, previous level of supply, gets broken and then now gets tested and buyers step in, it is no longer a level of supply, meaning resistance. It's actually turning into a level of demand where buyers are comfortable sitting. So as we start to come down into this new demand zone, bounce off, what we would be looking for is a green candle, which is going to come here to take out red. So this green candle takes out this red candle. Your entry would be here somewhere around 15,206. And again, if you're looking to take the scalp, where are we looking to take profits? At our next supply zone. The next supply zone is here. which we already made from this confirmation when we got rejected the second time, that we already added to the screen here at around 7:55. So if we're going to enter into the trade at 15,207, we're going to take profits into supply. And the price here was 15,206, and it trades all the way up to a price of 15,246. So we're essentially looking at a 40-point move here. And again, if you just kind of start playing these supply and demand zones, you can start to see that you had a winning trade here, you had a winning trade here, you had a winning trade here. That's 3-4 winning trades. That should be more than efficient enough to call it a day. I mean, even this trade here should have called it a day. This trade here should have called it a day. But I mean, again, if you're a hyper scalper and you're just constantly looking to take trades, there's 3-4 potential setups drawing your own supply and demand zones. And that's exactly how you can play it. Now, again, if let's say you missed everything and you just barely came into the market and you see this candle here get rejected at supply for the third time, you can then take a short position, and your stop loss, okay, your stop loss can be at the top of supply. Okay, does everyone understand that? Why would our stop loss be at the top of supply? Because we've already tested it once, we've tested it twice, we've now tested it again. If you want to take a short position here, what we would be looking for is a candle to take out the previous red candle on this rejection. We would get in here around a 15,224, and where would we be looking to take profits into? Into the next area of demand. So this area of demand doesn't get tested, it falls short of about 8 to 10 points. However, your entry should have been around 224. We trade all the way down to 200. That's 25-point move here, right? So this move from entry down to the bottom is a 20 to 25, 27-point move. So essentially you could have made money on the downside, even though this is a nasty trade where it doesn't really just kind of flush and wash out. It's, you know, back and forth, just slowly grinding down. You can see though that you would have picked up 20, 25, 30 points on the move down. So again, this is how you can start to navigate and manage your charts on a day-by-day basis, and set it up to trade futures and set it up to trade the supply and demand. If you guys don't like the big spaghetti chart, right? Like some of you guys don't like, you know, it's too complicated or whatever the case may be. You think you can outsmart the market. Again, you can see here that by simply just drawing in your own supply and demand zones, you can still trade very, very well. Why I use the big chart versus doing each and every single supply and demand zone myself is because it's tedious, right? Like it takes a lot of time to do this, and it's like I don't really need to do this because, you know, my chart is going to have all of these levels on there anyways. But again, you know, some people like to start off with a fresh chart to start the morning, and this is definitely a fresh chart to start the morning, and you can kind of plot your supply and demand zones as the day goes along, and it's definitely beneficial and it's definitely worthwhile to do. Again, if you want to trade supply and demand, if you guys want to learn more strategies and more ways that you guys can be profitable, and you guys want access to coaching, you guys want access to the chat rooms, you guys want access to my study guides and strategy guides where I go over all of my different strategies and chart patterns and all of that stuff, and get access to that one-on-one coaching. You guys are also going to get access to the live trading streams that are going on in the morning as well, that get uploaded to YouTube after I'm already off air. Again, if you want access to all that, become a lifetime member at evolutiontraders.com. Again, evolutiontraders.com, lifetime member. You're going to get access to all this stuff intraday to kind of help you go along the process. I'll see you guys on the other side.